Now let us look at another example of how IFRS 15 is going to change the revenue recognition. In the telecom industry, usually you will see in many countries where a handset is given free of cost or at a very low cost if you have subscribed to a 1 year or 2 year of minimum contract at a certain price, right? So usually what will happen is you will get a handset which is maybe a charge of 300 unit and a network service of 80 per unit, right? But without the handset. So these are the two separate services which a company may be selling, or a user can buy. If they need to buy separately, they might have to pay this off. Now the total price of this, if let's say comes to about 200 300 plus 960 for the whole year, that becomes 1260. So what the company is doing is they are selling this, they are showing that the handset is free of cost, but there's a minimum 12-month network services contract that has to be done by the Johnny. Now the Johnny is paying them, the price that the company is charging is 100 currency instead of 80, and is for 12 months, so means effectively he is paying 1200, right? So what will happen at the moment? What will happen is, because of IFRS 18, there is no revenue for the handset because this is given for free, but there will be revenue for network services which is charged at $100 per month, which total to 1200 per month. If you look at the P&L in total, the revenue which is going to be recognized by IFRS 15 and IFRS 18, IAS 18, is going to be the same. However, the segmentation of this will change. So how that will change? So IFRS 15 will say, okay, the transaction price is correct, is 1200, which is same in both IAS 18 and IFRS 15. However, the allocation of this 1200 will change. So because there are two separate performance applications, handset and the network services, and the standalone price is clear, 300 and 960, total 1260. Allocated transaction price for this based on the standalone prices. So how we are doing it, basically we are saying that okay, the total discount there is about $60, which we will allocate to the which is allocate in the same ratio as the standalone prices, or you can say we will allocate the transaction price 1200 in the same ratio as their standalone prices. So the discount which is given is allocated equally. So now the handset price comes to 285.70 and network services comes to about 914.370 or 3. So the revenue which is going to be recognized is the when the handset is delivered, then you have to recognize 285.7 minus the cost of it, and the network services which will be recognized is 76.2 a month. So if you are doing a quarterly, now if you look at the whole year, the total will remain the same in IAS 18 where you are recognizing 1200 in total. In IFRS 15 you are also recognizing 1200 into total. The cost will remain the same. The cost of handset will go to the P&L, the cost of network services go to the P&L, the net profit would also remain the same. However, what would change is two things. One is when you are compiling if you are a listed company and you are supposed to provide a quarterly results. So what will happen is in quarter where the handset is sold, if you follow IAS 18, the revenue is recognized less and is moved over to the future months. However, the IFRS 15 will say you need to recognize more revenue in the year, in the quarter where you are selling the handset, and the less in the future years. So since a lot of companies, the revenue and the valuation depends on the future cash generation income, it will affect the valuations for sure, right? Because you have allocated out a certain amount of money now already, and it's already in your bank account. That's one thing. Second thing is the profitability would also impact in the future, because you will be showing a higher profitability in the future, while you are showing a higher loss in the current period, because the cost of handset will be recognized in the month when it is sold. However, the revenue will be recognized over a period of time in IAS 18, but in IFRS 15 you have a better matching concept, which means you are recognizing the revenue and the cost in the same month of the sale. So that will be the impact of the IFRS 15 on revenue recognition and the profit and loss statements.